You're listening to the Weekend Real Estate Report on 105.7 The Fan.
You do a great job here giving the audience quite a bit of information. For a lot of guys like me, I'm sure a lot of females have certainly been enlightened and informed to help their life a little bit better. So keep up the good work.
Once again, Carl Delmont.
All right, welcome back. Weekend Real Estate Report. Carl Delmont here with you. And as promised, we have our special guest, Maria Flynn from Flynn Law Group. And she is based in Annapolis, but can handle all of Maryland. And she, aside from practicing law, you actually specialize in helping people with, I guess, short sales and what else? Loan modifications. Correct?
Yes, Carl. Anything related to loss mitigation. So if somebody needs a loan modification, a short sale, or a deed in lieu of foreclosure, any type of foreclosure defense or mediation, basically if anyone's distressed with their home, I can help them.
All right, so let's, just for the benefit of listeners, let's do a quick, I guess, dictionary lesson here. So deed in lieu is when someone turns around and just says, listen, I don't want the house anymore. I'm just turning the deed back over to you and they're walking away, kind of a simple transaction.
Exactly, and usually there's some debt forgiveness of what's called the deficiency judgment, the difference between what your house goes for and what you owe in your mortgage. And up until last year, December 31st of 2013, there was forgiveness on that debt, and now in the law, we're waiting, I think, till November for them to decide to extend it and make it retroactive for all of 2014. But that's a major consideration for people if they're considering a short sale or a deed in lieu.
Yeah, I remember the Mortgage Forgiveness Act expired, and because many banks dragged their feet in helping people, there were people who started a process like, say, May or June, and then got word that they were approved in January, and they're like, well, great, you're deducting $30,000. I'm not going to pay tax on that $30,000. I'm not even sure I want to do this now. So hopefully they do go back and make it retroactive. And if they do, maybe extend it through another year or something like that, because I do think it helps. Sticking with the terms, so short sale, the way I explain a short sale is when the homeowners still own the property, but they're no longer really allowed to negotiate the selling price.
Right. At that point, when you're doing a short sale, it's a three-party transaction, the buyer, the seller, and the bank. And the bank has to approve everything. And it's a long process for whoever is negotiating the short sale for you. It's recommended that you get an attorney involved. There's a lot of, I would say, just difficulty. It's hard to do on your own or for a realtor to do. Okay.
And then a foreclosure is when the homeowner and the bank just can't work it out, and the bank decides they're just going to take the property back.
Right, and I hate to see people go all the way up until the door of foreclosure. There's a lot of loss mitigation options that they should consider and be informed of their options before that's a possibility.
Yeah, I was talking to someone the other night who doesn't do quite what you do, but it's somewhat in the realm, and they were saying that because of Maryland laws and how things are set up here, that some people think, you know what, I might as well just live here for 3 years rent-free because they're not going to do anything for at least that period of time. It's almost like it induces people to follow that route. Do you agree or disagree with that?
Well, I've been on the front lines of this for 6 years fighting for homeowners, and I can only tell you what I see. I think if a house is in the $200,000-$300,000 range, those frequently go to foreclosure faster. If there's a house of higher value, $500,000-$600,000, they sit for a while. I have tons of clients sitting in their house not making payments for 3 or 4 years, and the bank explains it as a backlog in the courts. But what's really happening is the banks aren't really equipped to be asset managers, and they would sit on those bigger houses for a while and be required to cut the grass, maintain them, whatever. They flip the lower-end ones, but still with the lower-end ones, there's still a lot of delay.
Yeah, and the thing I've noticed, too, is that with a lot of these REOs, the real estate-owned, the bank-owned home properties, that one of the tricks I'm telling people, like for every time someone does a purchase with us, if it's a primary residence, we give them a free platinum home warranty. Our warranty, and I think some other ones do this too, but I can speak for ours, has a feature where you can actually, for a small premium, I think it's like $60, $70, you can actually have the warranty start the day of contract. And the trick I'm telling people, if you're buying a short sale or a distressed property, whether it's a foreclosure, bank-owned home, whatever, you really should do this because these banks, like you said, they're not asset managers. And they'll turn off the water, they'll turn off the electric, they don't winterize the homes. And then when the home inspector comes in and starts turning on the water and everything else, because the bank's, okay, what time are you coming out there? Oh, we'll be out there Wednesday. They call the water company, they get it turned on, and they turn it off a couple days later. Well, pipes could burst, all kinds of things could happen. And then if that happens, there's a leak, now you have mold in the property, and then the bank's like, well, I'm not going to pay for that. Well, no one's going to buy the house or get qualified for financing if there's mold in the property either. So there's a lot of issues to consider here. Yeah,
that sounds like a great insurance policy. I would highly recommend that.
So what are some major, let's start with some common mistakes, and you don't have to out anyone by name, but maybe just by example, of mistakes made going through the short sale process or the foreclosure process. I know we talked off air about waiting to the last minute, and that's something that people do almost in every category. But let's talk about how it pertains to yours and maybe share some other stories.
Okay. Well, Maryland is a judicial foreclosure state, so they have to go through certain stages. A foreclosure attorney has to file in court, and there's many different notifications that you would get that your house is going to foreclosure. And during that time, hopefully, ideally before that time, when you know you're in default, you would consult somebody in the profession, hopefully an attorney, that can advise you in the best way. But a loan modification, short sale, or deed in lieu of foreclosure, usually in that order, are what people consider. As far as loan modification, if you qualify, a lot of it's based on the numbers. They look for 31% of your gross income to be less than what you're currently paying on your mortgage. And if that's the case, you should be eligible for a HAMP loan modification. And I know this is going a little bit off subject, but back in 2008, when the government bailed out the banks, they gave them billions of dollars of TARP funds. These loan servicers, your mortgage companies, they had to sign servicer pooling agreements that said they allocated certain money to these loss mitigation problems. But it's an industry-wide standard that they're not complying with those agreements. And I know you asked me about what are some common mistakes, but I wanted to highlight the mistakes of the bank.
Okay.
Because that's really where I come in, is fighting for people's rights.
Yeah, I was going to ask you, for listeners, are you representing the borrower or do you represent the bank?
I represent the borrower.
I just want to make sure that's clear to listeners. Thank you.
Yeah.
All right. So we know that banks make a lot of mistakes. I've shared that with, the non-winterizing the homes and all the other things going on. But and we can stay on that if you'd like. But I always think it's really good for people to hear stories about real life situations, other people in this listening area who have experienced it, and maybe what got them to that point, and maybe some things they could have done to maybe made the process a little easier. Now, I know you posted on your Facebook page about a client who, called you last minute, and then you had to go and file a bunch of things, and you were able to save it, but a lot of work in a very short period of time. And I don't know if it was because of apathy or just bad advice or whatever, but if you could maybe elaborate on that story.
Well, a lot of people have been taken advantage of by, say, loan mod consultants or people that are unscrupulous in the industry, or they've been trying it on their own for years. The statistic is that if you try it on your own, less than 20 people will get a loan modification. So it takes an attorney to get it done. And, you just need somebody to be very honest with you about if you qualify or not. I turn away over 75% of the people that come through my door that don't qualify. And it's really based on the numbers. So I'm very honest with people and candid. And just come as soon as you can. Once you know you're in default, and you are not required to be in default to get a loan modification. That was a whole farce back several years ago, and banks would even tell...
Yeah, banks were telling people that skip a couple payments and call us back.
It actually drove them to foreclosure.
Yep.
I'm dealing with a lot of cases right now where people were wrongly foreclosed based on the banks being not ethical. So the banks use a lot of tactics to either string clients along, homeowners along, or just literally send them to foreclosure. And what's going on in the background of this is while you apply for a loss mitigation option, they do what's called an NPV test that stands for net present value. And in that test, they have decided whether or not it's profitable to foreclose on your home or not. So it helps to really be informed about what those NPV numbers are. I've got a whole system in place to deal with that. And then you'll really know your options, and then if you have them, fight for them properly.
It's always amazed me to hear stories of people that they make an offer on a short sale foreclosed home, especially when it's been on the market for a while, and then the home inspection comes in and the house needs work because it wasn't taken care of by the bank, and then let's just say it's $5,000, and the bank will hem and haw and fight and sometimes turn the deal down over $5,000. I'm thinking, okay, I know they're not really making a mortgage payment, but they have carrying costs on this thing. in 2 months they're going to lose $5,000. What are the odds someone else is going to come in 2 months and settle and accept the work that needs to be done when you have a ready, willing, and able buyer? It seems that sometimes it's like they're penny wise and pound foolish.
There's a lot of inefficiency in the industry for sure.
Yeah. Now, do you think the robo-signing fiasco that happened, I know there's a settlement on that, but do you think that actually gave the people when that was going on maybe a little moratorium because the banks are sort of in a holding patterns, and that's maybe encouraged some people to maybe go the foreclosure route because, like, well, no one's calling me, no one's bothering me, I might as well just keep living here rent-free?
Yeah, I think that it definitely did happen. They shut down foreclosures, I know, in Anne Arundel County for 6 months for Bank of America while they figured all that out. Wells Fargo does not have a good record with robo-signing. And the foreclosure attorney firms that the banks hire to foreclose, they're now robo-signing. Even the ones I have to deal with on a daily basis are very unethical. So it does help to know that some attention is being given to these grievances in the industry, but still, we're really far off from where it needs to be.
I don't know if you remember that story a couple of years ago where Bank of America foreclosed erroneously on a property that people paid cash for, and the attorney actually foreclosed on Bank of America's local branch.
I did. I actually used that story.
Yeah, I actually had that guy on my radio show when it happened. He was great. He's actually moved way up in the world. He was at a small firm, then went to another firm, and now he's at a bigger firm. So that really catapulted him. That was a pretty creative and ingenious way to get their attention. But it also shows how inefficient, to what you said, the banks are. They had the property years before. People foreclosed on it. The guy went and bought the house for them for cash. He has no mortgage. And somehow or another, they went through the courts and foreclosed on him. It just makes no sense. But that just goes to show you that, it's a very, very complicated system. And to your point, you need experts to help you out with this.
Yeah, definitely. And if I can say one more thing, this whole industry is new. I mean, it happened 2007, 2008 when the economy hit the fan, and everyone was scrambling to deal with it. And there's only so many people that can be staffed in either the loan servicers or the foreclosure attorneys, and sometimes they don't know what they're doing. And there's a new person for every job, and they have turnover. It's just a mess. So we're finally catching up to it now, and I think there's some policies in place and some regulation. But still, if you've been hurt by your bank or not given a loss mitigation option that you deserve, you should talk to an attorney to see if your rights have been violated and what your options are.
Hey, and while we have you, if anyone's interested in reaching you, why don't you give out your company number and website and all that?
Sure. Thanks, Carl. It's mariaflynnlaw.com is my website. And my phone number is 410-451-1457.
Okay, and I'll put it up on our Facebook page, too, for people to find. And what I want to do is, I think there's still a few more things we should discuss. So we got a couple more things to discuss here. We're going to go to break. When we come back, we'll have you, if you have more time, why don't you stay on, we'll cover a couple more things. Because I know there's a couple stories that are really worthwhile sharing. You deal with a lot of banks. Do you feel that in talking to these banks that there's a lot of inventory that's yet to come to market?
Yes, I do. Are you talking about the REO department for the banks?
Yes, yes.
Yes, I think the REO departments, they're flooded with homes. And
do you still think, more to your story earlier, that it's in the under $300,000, under $200,000 price range, or you think it's all across the scale?
That's my personal experience.
Okay.
I mean, eventually, if these people don't pay in the higher-end homes, they are going to foreclose, but they're just flipping the smaller ones faster.
Okay, because I noticed the last number showed that cash sales for investors were not quite as high as they have been, which I think bodes well for the first-time buyer because now they're not competing as heavily with someone who's paying cash. But I think as we get more inventory in there, that's going to actually increase the marketplace and help more people out. Right now, it's weird. It's a little bit of a conundrum in the sense that we have low rates and we have okay inventory, not great inventory, but it's kind of a weird buyers and sellers market, and I really think it depends on where you're looking and the type of home and everything else. Homes priced properly and shown correctly sell almost immediately. Homes that maybe people want way more than it's worth and hoping for the best, or maybe don't show properly or market it properly, are going to sit in the market a little bit longer, but that's something else we can discuss. Are you listening to Weekend Real Estate Report? Our guest today is Maria Flynn from Maria Flynn Law Group, or the Flynn Law Group, and that's FLYNN. We'll put it up on our Freedmont Mortgage funding Facebook page so you can find information. But if you have anyone you know, siblings, coworkers, neighbors, whatever that are maybe in that situation could use some help regarding a foreclosure or short sale, tell them to stay tuned or check the podcast out later in the week. And we're going to take a quick break, and we come back more with Maria Flynn from the Flynn Law Group. You're listening to Weekend Real Estate Report. Remember, information, not an infomercial. We'll be back in a couple.
The Weekend Real Estate Report will be right back on 105.7 The Fan. Now back to the Weekend Real Estate Report on 105.7 The Fan.
All right, we are back. Weekend Real Estate Report. We're only on for an hour today, but a lot of information to put in that hour. And also, we have our guest today, Maria Flynn from the Flynn Law Group. She is an attorney that specializes in helping people negotiate their short sales, foreclosures, any kind of a distressed property situation. And we've been covering a lot of things, but we want to go into now maybe some good cases, things that you've actually helped, results for people. Why don't you share some of those with our listeners, Maria?
Sure. Well, let's talk about the one that I got yesterday. I got a principal reduction on a house that was loaned for $600,000, and I reduced the person's interest rate from 6% to 3.375%. So that was a good modification. That was an in-house modification, not a HAMP modification, but I'd fought for 3 years for that homeowner, so I was really proud of that result.
Now, it's $600,000, that kind of drop. That's probably, I'm going to guess, what about a $1,200 payment reduction? $1,200 a month?
At least, yeah.
Okay. Now, when they do principal reduction, I've experienced some clients that have the modification, and what happens is the bank will lower the interest rate, and then what they'll do is they'll take a piece of the balance out. So let's say they owed $180,000. The bank will say, we're going to give you $120,000, and they'll lower the interest rate a little bit. Of the difference, they may take $50,000 out and hold it with no payments. And then what they do is do like a 40-year AM or something crazy. So the actual payment owed per month is less, but part of that principal reduction is still owed. How did this one work for you?
This one was a flat-out debt forgiveness of $115,000, but I will say to listeners, this is rare. I probably get principal reductions in less than 10% of my clients, and there's really no rhyme or reason for when I get them. But what you're talking about, and you know the terms better than I do, because you're a mortgage guy, I'm a lawyer. I'm wearing the lawyer hat. I think what you're saying is they carve out a certain portion of what the principal was, and sometimes they'll put it as a 0% balloon payment on the end of the loan.
So it's not included in the number that the new payment's based on. And then what they do is sometimes the rate doesn't get reduced too much. It's just they do a 40-year AM. And then what happens is the people might see their payment go down $300-$400 a month. But at some point, they're going to still owe that entire balance.
Exactly, upon transfer. Yeah.
Now, your client with the $115,000, whatever number you said it was, now, because of the Mortgage Forgiveness Act, at this point in time, they'll have to pay tax on that money? At
this point, but they are, I think, I pay attention to the news as much as I can, and I think in the lame duck section in session in November, they are supposed to vote on making it retroactive back to January 1st, 2014, and then extending it through the end of 2015. So I have a whole bunch of clients that are biting their nails waiting to hear this decision.
Okay. But still, in that case, that client did benefit immensely. So what happened during that 3 years you were fighting for them? Were they still making payments? Were they in a bad situation? What was going on?
This particular client was not. Again, you don't need to stop making payments in order to get a modification, but their hardship was so great. I think the husband and wife lost their job for a certain portion of that period. But just fighting for 3 years to get what they deserve. They got some improper denials from the bank where they would deny the client verbally and not send a written denial. There was a lot of lost paperwork, asking for the same paperwork again. I deal with the same problems that a homeowner might, but I'm a little bit more efficient being an attorney, but it makes you want to bang your head against the wall dealing with these loan servicers. And all it is persistence pays off.
Yeah, and I think some of the things that I've learned from people over the years is that when it comes to a loan modification, as you said earlier, you don't have to be behind. There's no rule that says you have to be, even though the banks will make you think that. Also, it doesn't have to be, it has to be a drop, something that's affected you. So let's say for 10 years you had overtime income. and then for the last 2 years you haven't received it, and that income is how you paid that overtime was helping you pay your bills, that might be reason enough to qualify for a loan modification. Or let's say you or your spouse had a part-time job for the last 5 years and lost that, but you still have your full-time job. That, again, might be another reason. So there's a number of things that go on. I've even heard examples where a couple took in their parents or one of their elderly parents, had to take care of it for them. And that caused a financial burden, and they were able to successfully get a loan modification because their expenses went up due to them helping a family member. So jump in if I'm incorrect here, but those are the stories I've seen or heard. And I think it's important for people to know that if you're finding it difficult to make those payments and you don't qualify for a refinance or anything else, you don't have to stop making payments to qualify for loan modification. Talk to someone who knows what they're doing, and you may be able to preserve your credit and save some money.
Yeah, you're absolutely right. And hardships, there's a wide range of hardships that people can exhibit, whether it be a medical reason, loss of income, loss of job, divorce, many, many hardships that you can use to apply.
And what's interesting is, we've talked before about the FHA Back to Work program. And that's a program that allows people to buy a home as recently as 1 year after the date of foreclosure or the discharge, the bankruptcy discharge, short sale, everything that. Not everyone will qualify, but it's a program that people who had these hardships can get back into the marketplace. They're calling them boomerang buyers. And I think that we're seeing some activity in that marketplace. So that's somewhat encouraging as well, because at least those people know that if they have to do this, maybe sort of, take one now, down the road, there's at least, light at the end of the tunnel. And we have a lot of examples of people benefiting from that program.
Yeah, that's good. All these programs are meant to be rehabilitative, so I'm glad to see that there are programs where people can buy houses shortly after one of these events.
Now, what about, and I'm seeing this just came on my radar about 3 months ago, and we have one right now in process, same thing, where people are selling houses and banks are selling houses and they're not legally able to. Case in point, we have one right now where the bank the mortgage lender did the loan. Within like a week, sold it to another bank. The person went first payment, second payment, third payment default. So the first lender had to buy the loan back. Well, they never put their name back on the paperwork. 3 years later, they're selling the property. We're in the midst of doing a purchase for it. Title work comes back, and the bank or the lender that's selling the property is not the legal owner. So now we have to go back and do all that stuff. Have you seen that?
I have seen a lot of it. Exactly the situation that you just described. And there's a lot of other situations that involve improper, wrongful foreclosures that banks just full throttle foreclose on these houses, and they don't, cross their T's and dot their I's. And there's a lot of mistakes in recording documentation. I'm collecting names of people that have had wrongful foreclosures that want me to actually sue the banks, possible class actions. Mm-hmm. Nothing I've gotten into yet. But I can tell you, only from being on the front lines, that I see it every day, and there really needs to be some attention paid to this issue. So,
from where you sit, what would you suggest to someone who is buying a property that that's bank owned? Should the realtor or title or mortgage company or even the buyer go into public records and make sure, hey, who is the legal owner of this property to avoid this? You can do a title search, and that can reveal that information. Definitely talk to an attorney and make sure that everything is proper with it. And you probably need some representation with dealing with the REO departments. They're pretty difficult to deal with. Yeah, I think a lot of realtors consider themselves experts to deal with them, and they probably are. But again, we're seeing just a trend in the last, I'd say, 3 months. I've seen probably at least 6 or 7 transactions where the person who contracted to sell the house is not legally able to sell the house, and we don't find out until we pull title work and like, wait a minute, you don't own this property. Yeah, I do. Then we look through the paperwork like, well, no. Sometimes it's a mistake, a title company. Sometimes that title company is defunct, but they didn't do their title work properly. But other times it's like this one case I gave you where the mortgage was sold, and then a few months later it had to do a buyback, and they never went and changed the legal ownership of the property. So in their mind, like, they own it, they're paying on it, they think that they should sell it, but they legally don't own it. It'd be like if you and I jointly owned a car, and you signed off a title, and then you said, hey, I want to sell this car. Yeah, no problem. And I forgot you signed off a title. Well, you couldn't sell the car. Right. So I guess if that makes sense to listeners. Maybe not. I don't know. It's early. I get confused on some of these examples, but so it's a great analogy, Carl. All right. Well, thank you. Thanks for that save. So what are some other scenarios or things you can think of that might help listeners, maybe just another real example or just some advice that you think could prevent some of these mistakes you're seeing?
I guess the most helpful thing to mention would be just the types of modifications that somebody can get. The first type, the most desirable type, is the HAMP modification. It's the government program, Obama's plan. The reason why I like HAMP is if you fit into certain criteria, there's like a waterfall of tests, they have to extend an offer to you. So I can fight for that either in court or just represent you in applying. And then the other type of modification is the in-house modification. And the reason why I don't like in-house means that in-house just means that it's at the discretion of whoever owns the loan, the investor. So they can deny you based on their underwriting guidelines. There's no standardized government program. So and that the in-house modification usually carries a higher interest rate than the HAMP modification. So just be very informed about what your options are. There are certain tests that can calculate what you qualify for, and if anyone needs help, I can certainly help them with that.
Okay, why don't you throw out your information again?
Sure. It's mariaflynnlaw.com is my website, and my phone number is 410-451-1457.
All right, and again, I'll put that on the Freedmont Mortgage Facebook page. And then a couple other things, too. We're seeing some examples of people who are looking to buy, and as a first-time buyer, they're looking at these bank-owned homes, everything else. I think that maybe people need to understand as a first-time buyer, I don't believe you should be buying it at auction unless you have cash and you're going to pay cash for the property. But if you're financing your property, auction, look, when you buy it, it's as is, where is. There's some things there that can make it a little bit more difficult, especially if the property needs work and you have the cash to fix it up. You may not have time to do a renovation loan on an auction property. So there's some things to think about when it comes to short sales or REO or things like that. Sometimes that could also be an issue for first-time buyers because a lot of them are trying to get in with as little money down as possible and don't have a lot of cash. And like I said, these homes may need work. The one trick, like we said, the home warranty can be one benefit. But have you seen some instances where people have tried to maybe purchase a home, and as they're going through the process, the house ends up, they uncover with the home inspection, the appraisal, whatever, so much work that needs to be done that they're willing to, maybe they still want to buy the house, but the bank's not willing to maybe absorb those costs or fix it?
Yeah, unfortunately, all these properties are sold as is, and the bank really isn't equipped to negotiate any extra money or any extra help. So it's just kind of an is-what-it-is situation. And you have to have your eyes open when you walk into buying an REO home.
Yeah, like I said, they're notorious for turning off the water and electric, turning it back on just for the inspection. But sometimes the appraiser or the home inspector may uncover something, have to go back out there again, and they won't turn the water or electric back on for that period of time. And it always baffles me in that if it's an empty house and you're turning the water and electric on, let's just say the process takes 2 months because it's a bank-owned property. What are we talking about total here? Like maybe $150 an electric and water bill for 2 months, worst case scenario?
It goes back to the whole banks aren't equipped to be asset managers.
Yeah. So for people looking to buy, we do have the different programs out there. We have the 203K. It's an FHA product that allows you to buy, refinance, purchase the property, and renovate it. It does take a little bit. We have a HUD consultant, there's a contractor, some other things. It takes a little longer than a normal transaction, but it can be done pretty quickly. And then we also have the other product that allows you to buy even investment properties at market rates through the Fannie Mae renovation product. So two great products, people looking to maybe buy what we call distressed sales. And I've noticed that distressed sales have they're less as a percentage of the total sales going on right now. Are you seeing that as well?
Yes, I am.
Right.
Yeah, I think they're being filtered out of the market. There still are a lot left, and I think we're going to have another wave of them coming. With the interest-only loans reset, I think a lot of people are going to have trouble with those higher mortgage prices, and we'll probably get new inventory of foreclosures.
I think home equity loans are going to be the next one, too, because 2004 seemed to be the beginning of the meat of people taking out those HELOCs. And what people don't realize is that most home equity loans have a 10-year draw. After that draw, that's the time you're allowed to write checks against it. After that 10-year period's over, and the majority of those people are interest only, those things will turn into a 20-year fully amortizing loan. An example I always give is, let's just say, and I'll be generous here, a $200,000 home equity, interest only, you're probably paying, say, $600 a month. When that fully amortizes to a 20-year loan, you're probably getting closer to like $1,800 a month. So if you're ready to have your mortgage payment triple, don't do anything. If you're not, you may want to actually call us and let us take a look at your note, see where your terms are, when you think when we can tell you when it's going to change, and we can find out if there are options, whether you can refinance into one new first mortgage or if we can get you new home equity. But a couple of things to think about there. But I think that might be another catalyst for, as you said, more of these distressed properties hitting the marketplace. So, Maria, I appreciate being on the show. We got to sign off in a couple seconds here. What I'll do is I'll post your information on the Facebook page so people can find you. And if we have questions or we think we got some more topics, we'll bring it back on another time, okay?
Thanks for having me, Carl.
No problem. All right, we want to thank our listeners. Well, as we said, Ravens play at 1 o'clock. We are a 1-hour show, 9 to 10. When they're not playing at 1 o'clock, we're back to our normal 2-hour format. If you need us during the week, 800-955-8508. Or you can find us at Freedmont, FREEDMONT funding.com. And, of course, Facebook, website, all that great stuff. NMLS number 1071. And, again, you can reach us during the week. If you're looking at getting a pre-approval today, we do have people on standby. Just go to our website. We'll get back to you. Otherwise, call us during the week, and more than happy to help you out. Never an application fee. And again, everything we do here is local. Processing, underwriting, and funding. Give us a call. Freedmont Mortgage Funding. Happy to help you out. 800-955-8508. Thanks for listening. We'll talk to you guys next week.